The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And we're going to be talking about money. You know, for 8.5 years, I always started the program by saying, it's Friday, we're going to be talking about money. And you know what? It's Thursday. It's Thursday. And I'm having trouble getting used to that. It was a short week. It usually takes me about 8 to 10 hours to prepare a program. In the past, I've always begun on Wednesday afternoon to form the concepts, on Thursday to begin to write the program, to begin to do the notes, and finally finishing up on Friday. And this week, yesterday afternoon, as I started to put it together, I realized I don't have Thursday afternoon. I don't have Friday afternoon. So what's gone on? If you don't know what's gone on, why we're broadcasting live on Thursday instead of Friday, is the tower for the radio station is at the Port of Tacoma. And when the Port of Tacoma put in new cranes, the broadcast transmitter interfered some with the mechanics, the electrical part of the cranes. And so until they solve that problem, the program's been moved live to Thursday. It'll be broadcast on Friday. So if you're listening to it and it's Friday, it's still the same program. And it's rebroadcast on Saturday at 6 p.m. as well. So that's what's going on. So we're Thursday, and it's about money. It could be Friday if you're listening to it on Friday. So this is the time of year. This is the first broadcast of 2017. I've been doing this since 2008. So it's been a while. And so to begin 2017, it's like beginning all over again. And we are beginning all over again. There's a lot going on right now. And as you pick up at Barron's or listen to CNBC or Money Magazine or any of those other documents and journals, they start talking about the 10 best stocks to own in 2017, the 10 worst ones in 2017, the 10 best mutual funds, the mutual funds not to own. They start talking about changes that should be made because it's the beginning of a year. And for me, that's the wrong approach. It's a very short-term approach. It looks at things by the year. And there's nothing magical about the beginning of most years. This year may be a little different. And we'll talk about that. We're going to talk about that later in the program. But most of the time, you have a theme that runs over a long period of time, and the changes from year to year are worth evaluating. It's worth evaluating at the middle of the year. It's worth evaluating every quarter or on a regular basis. But there's nothing magical about the beginning of a year, unless there's something very significant. Of course, there is something significant because we have a new president coming in. We're going to talk about that and the impact. It's worth, however, reflecting back on the previous year because the numbers are reported on a yearly basis, on a calendar basis, looking back on how well we did, what we did in terms of forecasting what the year was going to bring, and what the results were. I go to a lot of conferences, or a number of conferences, and I'm always surprised at the speakers at the conferences and the audience at the conferences who will listen to a speaker and come back the next year and he got it so completely wrong, absolutely wrong, but they don't ever hold the speaker accountable. I'm accountable for what I predict. I'm accountable for what I say. And I'm not always right. I try to tell my wife that I am, but she doesn't believe that either. So I want to take the first part of the program and talk about how I did at the beginning of 2016 and projecting what was going to happen in 2017. I did a program at the beginning of the year, and I talked about information that I actually came from Richard Bernstein out of Financial Advisor magazine. And he said that 2016 was going to be a very difficult year for investors, but not for investing. And I believe in that. I believe that that was really true. It was a presidential election year. It was going to be a time in which you had congressional races, you had the presidential race, and you had the debates that were already going by that time at the beginning of last year. And the congressional races, people pulling away, people saying all sorts of things about the Obama administration. Congress had low approval ratings. Obama's ratings were actually increasing at the time, but they were still not that great. And there was a lot of negative campaigning. There was a lot of be scared because things are really bad, but trust me, I'm going to make them better again. And that's the way it worked. But the thing is, the economy wasn't that bad as we began last year. The economy's not that bad as we go into this year. If you look around Seattle, you see today's 58 cranes in Seattle. We have as many cranes for high-rise buildings as San Francisco and Los Angeles combined. That's what's happening in Seattle. And while we're really doing well, the rest of the country is doing pretty well, especially on the coast, the West Coast and the East Coast. In between those flyover states, they're still struggling some. We know that. But, as you look around the country, generally the country was doing well as we came into the beginning of last year. And, I use the saying a number of times. Daniel Patrick Moynihan said, everyone's entitled to their own opinion, but no one is entitled to their own set of facts. The facts were that things look good for the year. The budget deficit. There had been a lot of talk about the budget deficit, about the debt, but it had been coming down. The deficit had run over $1 trillion. But by the end of 2015, it was down to $500 billion. It had been cut in half. The economy was growing. Revenues were coming in. Spending was beginning to level out because of the safety net spending was reduced. The deficit was down to 10% of GDP. And to put that into perspective, when you're buying a house, they look at your income and figure out how much debt you can handle, how much you can afford to pay. It's the same way for a country. The difference is you have a finite lifetime. I have a finite lifetime. At some time, we're going to die. But a country doesn't necessarily have to die. A country can go on for generations. So there's no finite timeline for a country. And yet, some of the same principles hold. You can only afford X amount on your debt. But by the beginning of last year, the deficit was down to 10% of GDP, which was a very favorable amount. Things were looking better. It was just 2.5%. And when you think of where we were better than normal. In terms of workers, there was a lot of talk about low-income workers and wages hadn't increased. But by the beginning of last year, unemployment had come down, the unemployment rates were down, and we were starting to see wage pressure happen. Already by last year, we were seeing the average wage up 2.3% at the end of 2015 compared to the beginning of 2015. Wages were increasing. We saw that all during last year. Wages are beginning to increase. The average hourly earnings were headed up closer to 3.5% for 2016, which did happen. Purchasing power was the strongest in 2016 that it had been in 6 years. And a lot of that was due to what happened with oil. Oil prices had come down, and much of that money went into the pockets of the consumer. All that was happening. Gas prices were down, commodity prices were down, products produced in emerging markets that were being imported into the United States were being imported at lower and lower prices. Oil was down, inflation was low. Things were looking very good at that time. Small businesses were beginning to hire, and hiring was much brisker than it was, much faster than a normal rate. So All those things were happening. And if things had been as bad as the politicians had tried to make it out, that wouldn't have been. That wouldn't have been. The dollar was increasing. And the dollar is an indication, when you look at how the dollar performs against other currencies, it's a measure of what the world feels about a country's economy. The dollar's increasing. Europe was flagging. If you look at right now, if you compare what's happening with Mexico and the concern over this new administration, the peso's dropping because there's a lot of concerns about the impact that the Trump administration will have on Mexico. Surprisingly, the Chinese currency is increasing the last few days. But we'll get to more of that later on. You know, my outlook for the beginning of last year was that turn off the TV, turn off the radio, turn off the programs. Investing was going to be good. I actually picked a number for the first time. I read a book called Super Forecasting by Philip Tetlow, who said, you're a chicken if you don't put down a number specific for your forecast. So, geared by that, I put down a number, and I'll share that number with you right after the commercial break, because we are coming to a commercial break, so don't go away. I'll share that number that I predicted at the end of last year and how I actually did. Don't go away. You want to hear what the number is. And I've got great guests, too. Don't go away. We'll be right back.
Stay tuned. About Money returns in a moment with Mike Adams here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Did you know the 20-year annualized S&P return was 8.19%, while the 20-year annualized return for the average equity mutual fund investor was just 4.67%? That's a gap of 3.52%. It doesn't sound like much now, but it could mean the difference between retiring in comfort and running out of money. For some seniors, a gap that large could cost them hundreds of thousands of dollars and cut their retirement short. Don't run out of money. Call Mike Adams of Adams Financial Concepts today, 206-903-1019, and learn more about how you can, 1, create wealth for retirement, and 2, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019, or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So welcome back. I've been talking about my projections for 2016, reviewing why I got to my projections, what my thoughts were on how I got there. A lot of people were pretty negative. They listened to what was going on with the politicians. They listened to what was going on with the claims of what politicians were claiming. And I kept looking at the politicians and realizing these people are politicians, they're not investment people. And so I looked at the investment side, the numbers, and because I'm a mathematician, I always look at the numbers. And I came up with my own forecast. I came up with a forecast of 2398 on the Standard & Poor's. Now it finished at 2238. My forecast was to see that the Standard & Poor's 500 would grow 13.4%, and it actually just grew 10%. Now, if I count this weekend, I think I'm pretty close. But this week didn't count. End of the year was 2238. My forecast was 2398. I have to say that I was positive, but I was maybe a little over as optimistic. A lot of people were looking at the market in last year saying that things were looking kind of slow. The oil prices were down. There was a drag on the economy. But to me, it seemed like it was going to be a bad year for investors if they listened to what was going on, but a great year for investing. And 10% return is a very nice return in the stock market. Not as nice as 13, but a pretty nice return. And for all that being that positive, my returns were worse in 2016. And not by a small margin. It was closer to 6% that I trailed the market. You know, that's depressing for me. That makes me feel sad when I go through that. And yet I've been through that before. In 2007, in 1999, 1998, I was underperforming the market in all those times. Now, 99 and 98, I didn't have my own company. I worked for somebody else, so you can't verify those numbers. But I posted them on my website for a while. I posted them as a hypothetical return, but they really reflected what my clients were doing. And my clients can tell you that those were real numbers. But in 2007, that can be verified. And the Standard & Poor's was up 5% in 2007. I was down 10%. I was 15% below the market. Now, there have been studies that have been done to show that people who outperform the market actually do go through these periods of time. And I've been through these times. As I said, 2007, 99, 98. In 2007, I was down 10% when the market was up 5. But in 2008, when the market was down 37, I was only down 31. That doesn't sound all that great. I was down 31. But in 2009, when the market rebounded and was up 26%, I was up 31. In 2010, when the market was up 15, I was up 25%. And my clients had reached new highs by the beginning of 2010. We'd recovered all that down period of time. We'd recovered from 2007. We'd recovered from 2008. We were off and flying to new highs. And again, this year, even with the performance where we are, we're at new highs. You know, I buy things based on fundamentals. I buy things that I think have a long-term positive outlook. And that's where I build my portfolios around. You can see the track record. It's posted. And it's verifiable. In 99, when the market was up almost 40%, I was up only 40%. But in 2000, when the market was down 9, I was up 32. Yes, when the market was down in 2000, I was up 32%. I was out of dot-coms in 98 and 99. I was early, and so I trailed. But in 2000, when the market was down, I was up. In 2001, when the market was down 11%, I was up 25. 2002, when the market was down 22, I was also down. Doesn't always work. 2003, I was up 95% when the market was up 28. So I go through these periods of time, and what that says to me is there's not a much better time to invest with me now, because I believe, even though past performance is no guarantee of future performance, that it may be a very positive time. I believe it's going to be a positive time with the Trump rally. The Trump rally goes in. He's not even elected. We're not seeing any of his results yet, but there's an election and an optimism. Unemployment and labor rates are down. That's not due to anything with Trump. That's due to what we're coming out of with the Obama year. The deficit reduction was done during the Obama years. The low inflation rates done during the Obama years. The low oil prices, the stimulus of that, the Obama years. Not seeing the impact yet of Trumpenomics. I believe we are going to see an impact, and I believe it's going to be a positive impact. And I will come back to that after the interview with my guest. I have two guests today. They have an interesting story to tell, so I want them to tell the story. They're from Alaska Air Forwarding. So welcome to the program, Jim and Dominic.
Thank you.
Thanks, Michael.
So Dominic Ferrari.
You got it.
I told him coming into this that I mispronounced his name, and true to form, I did.
Well, you got Dominic right, so
I got
that's half the battle, right?
So Dominic, why don't we start with your background?
Okay. Well, I'm local here. I grew up in Bellevue and went to Eastside Catholic High School. And after that, went to St. Mary's down in California. And after 4 years at a great school, I decided to come back to Seattle and do the technology thing, and did a .com for a number of years, and did a stint at Microsoft, which was an amazing company with a lot of really amazing people, intelligent, smart people. Did that for about 6.5, 7 years, and then did some consulting at Microsoft, and then, like all good Italian boys, my father came to me and gave me an offer I couldn't refuse, and decided to bring me into the fold at his company, Alaska Air Forwarding.
Okay.
Yeah.
And Jim Carter, also of Alaska Air Forwarding.
Born and raised in Seattle. I consider myself a true blue Seattleite. I graduated West Seattle High School and went to work after that. Got a degree at 35 from South Seattle Community College in IT just before the .coms went .flop. And I spent most of my life doing different transportation jobs throughout the entire industry.
So let's talk about Alaska Air Forwarding. Let's clear up one thing. It's not part of Alaska Air.
Correct. It is not part of Alaska Airlines. We use Alaska Airlines on many of the shipments that we do up to Alaska. They're a great partner on many aspects of our business, but we do not work with. We are not part of Alaska Airlines.
Okay.
We do get a lot of calls from Alaska Airlines passengers asking where Aunt Mildred was or what time her airplane is getting in, but we usually forward them off to their call center. But
so you probably don't want me to give out the phone number as someplace you can call and see
yes,
if the flight's on time.
That would be a positive for all of our customer service reps. They get to get that on a daily basis. So I'm sure they're happy to have that out there right now.
So let's talk about what Alaska Air Forwarding does.
Okay. Well, we're a freight forwarder up to Alaska. Kind of tells you about the name right there. We have 3 different divisions within our company. The main one is Alaska Air Forwarding, which is shipping freight from the lower 48 and even internationally up to Alaska. We do domestic shipments also. It seems that our niche has been Alaska since the inception of the company. The other aspect of the company is freight management systems, which is our consolidation arm up to Alaska. Most of that is ocean. Almost all of it is ocean. So we consolidate people's freight for ocean shipments up to Alaska. Of course, a little bit longer time frame than air freight. And the last one is, I'm sorry.
Let's talk about the consolidating of freight,
Okay.
because I think that's a concept that a lot of people don't understand.
Okay.
What happens in terms of consolidating freight?
So if we take it by an individual company, say you are a fishing company, a fishing vessel that needs to get all of your freight up to Alaska, but you don't want to send it. Okay, you don't want to send it to by air freight because it's going to take it's going to be too quick and it's going to cost too much money. On the consolidation side, it'll take up to 7 days on the ocean. We'll take the company can either ship the freight into our dock or location, or we can specifically pick it up locally here in Seattle, deliver it to our warehouse. And the consolidation portion of it is consolidating the freight into pallets or palletizing the freight or pushing the freight into the container to allow our load masters, like some of the people in our warehouse, to fill the container completely, and you share the price of that freight all the way up.
So you share it with everybody else that's in that container.
Correct.
You might have 10 or 15 or 20 different companies that are shipping things?
Yeah, it depends on, there are specific companies that, of course, have their own containers going to their own yards. But there are other companies that are smaller that want to get more bang for their buck, so they share in the price. It's a pretty good system, and we enjoy doing it. I like to say a lot of the employees that we get are really good at Tetris, because basically they look at a container, they can see where they slide this freight, and when I look at it, I see a big box, and I'm like, oh my God, how are you going to fit that in there? And then sure enough, Jim and the rest of the guys that are on the floor, that Jim has many hats at the company, they help put the container item in there sometimes, and I still don't understand how they do it sometimes.
It's packing and getting all of that in.
Yeah.
And taking every bit of space in that
Exactly.
container.
It's pretty handy being able to look at some freight in a container and do the spatial relations, and that's going to go there, and that's going to go there, and this is going to go here, and it's all going to fit right on.
We're going to come back to this and talk about the third part of the company right after the commercial break, because we are coming to a commercial break, so don't go away. We'll talk about the rest of that, and we'll come back and talk about Trumpenomics as well. Don't go away. We'll be right back.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
KOL. We're back with more About Money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
I'm here with Dominic Ferrari and Jim Carter of Alaska Air Forwarding. During the break, Jim, you started talking about the advantages of consolidating. Why don't you fill in?
Oh, absolutely. Consolidation freight is a very lucrative and cost-saving for most of the people out there that are shipping, everything from camouflage suits so they can go hunting in the fall, right on through the soda pop and whatnot that they buy, the Pepsi or the Coke products. If you consolidate freight, you can wind up saving a lot of money as a shipper because you're paying such a lower rate than if you were to go directly to the steamship lines or the barge lines. By using a consolidation service such as ours, we can lower everybody's rate across the board and save everybody money. And obviously we make some ourselves. That's the whole point of being in business, as you know.
It's kind of like the ride sharing when people are on the road.
Exactly.
You share the gasoline expense among 6 people instead of one person driving.
It also helps on the minimum side because there's a lot of companies that, if they want to ship something smaller, we'll be more apt to ship that on our dime and on our consolidation as opposed to getting hit by a large minimum.
So the third part of the company, let's talk about the third part.
Okay.
Because that's probably the most fascinating of all.
Yeah, the Alaska Air Forwarding side is really our bread and butter. It was what the company started at in 1965. It was a buying service for the Alaskan fishing fleet up in Alaska. And, my father was lucky enough to come into it or purchase it around the 90s. And it was a great time to be working up in Alaska at the time. The fishing vessels were, there's a lot of them. There is a lot of oil, a lot of really expansion up in Alaska, and they took definitely advantage of that. And from then it's really we're really a company that focuses on time.
But you also do the import-export.
Yes, we do import-export too, and that's our international division, World Cargo International. That was an offshoot of Alaska Air Forwarding, where a lot of our customers came to us and said, "Hey, we have parts in Sweden, Scandinavia, other locations around the world, and we need those parts up to Alaska. We need those parts to other locations around the U.S. Can you do it for us?" So we started that aspect of our business too.
So give us an example of why that's important. Why would it be important to ship something up in 24 hours?
Well, we had a for instance a couple months ago. Actually, it was about a month ago. We had a company who was up in Dutch Harbor who brought their fishing vessel up to the dock, and one of the pumps to pump the fish out of the boat into the holding tanks to enable them to be processed was broken. This can happen any number of ways. There's also arms that can break, that offloading other freight and things of that sort. But on this specific time, the pump was broken. And as you can only guess, having a bunch of millions of dollars worth of fish swimming around in a tank, there's a pretty small life cycle when it comes to that. Everybody gets a little cramped. plus all the people are sitting there waiting in line to get up to the dock, plus all the people that you're paying on the boat. So what we did was we took, they found a part in California that we picked up, and within 24 hours, we picked it up and delivered it in Dutch Harbor to the boat, fixed the part, and they were able to process their fish within a 24-hour time period, which saves them just a large amount of money. And it's one of those things that it may not have been the biggest part on the boat, but it was probably the most important part of the boat. So
at that time, it sure was.
Yeah, and that's one of those things that it's an interesting gamut to run in order to fulfill something like that for a customer.
And that's something way beyond what most freight forwarding companies, they'll forward the freight, but you're dealing in a niche market of actually doing that import-export international business.
Yeah, I mean, that the import-export is definitely an integral part within our company. And the Alaska market is definitely an integral part of our company. Majority of the profits that we have within Alaska Air Forwarding are part of that air freight arm of the division. The air freight division arm of the company. But yeah, it's the best thing about the operations of Alaska Air Forwarding is that every day is completely different. When you work at a technology company or you do coding or something like that, you wake up and you kind of know what you're going to be doing on a daily basis. I wake up and when I get into work, I could have to fix a pump out of somewhere that I didn't even know I'd have to deal with in the morning. And it's an exciting type of business to be in.
So what happens when somebody needs a part from Scandinavia or a part from the rest of the world somewhere?
Well, there are a lot of different manufacturers in the fishing industry. A lot of the processing equipment and the equipment that's on the different vessels is very specialized. You can't just go down to Ace Hardware and buy the part you need. Our World Cargo Division is very good at coordinating with agents all over the world, in Asia or in Scandinavia or wherever the part may be from, and we can coordinate due to the specialists that we have and how good they are at what they do. We can coordinate having a truck in Beijing, China, go over and pick up a crate that has a hydraulic pump on it for a specific type of machinery that processes fish, for example. And we can coordinate getting the documentation for customs, both importing and exporting out of China and into the United States. We've got a series of processes that we can go through that expedites getting the part from where it's at to where it needs to be, using, depending on how quickly it needs to get there, either ocean services or land services accordingly, or air services. And because of the specialization of the people that we have in our company, we're able to go ahead and accommodate getting that product or that machinery or whatever the piece may be from point A to point B in the quickest, most economical fashion.
It's a fascinating business.
It's definitely different than a lot of other companies that are out there, and it's a great business to be in, definitely.
So if someone wanted to get a hold of you, how would they do that?
Do not call Alaska Airlines. You would have to call Alaska Air Forwarding. We have a great website where you can track and trace your product to Alaska Air Cargo or AlaskaAirForwarding.com, as in forwarding. And you can do a quote, pick up a quote right online right there. You can call us directly. We do not believe in cyber secretaries. So whenever somebody calls, the first person that you talk to can route their freight, no matter what. It's a very small business feel, which my dad and his partner have definitely cultivated over the years. So you don't have to worry about talking to somebody that you don't want to talk to. You talk directly to the people that are in charge.
And the phone number, if someone wanted to call?
800-426-0004.
And what information would they need to have?
The biggest information, the most important information is the size of the weight. The dimensions are very large. Are very important and specific. And when I meant to say large in the fact that what we focus on is large parcels, large product, large things. Like I said in the story before, we may ship small pieces from time to time. The large stuff is really where we shine, because there's not a lot of companies that can get. You're most of your office here, I could probably send up there. This desk, which is quite large, we can send up there, and there's only a number of not even less than a handful of customers or companies that can do that up to Alaska.
Well, it's awesome. It's a fascinating business. And thanks for being on the program.
Thank you for the invite. I appreciate it. Yeah.
So I want to shift gears, and I want to talk and resume from the beginning. What do I see for 2017? And it's my opinion. It's what I see. And we've just gone through a very unusual time with Trump being elected president. Whether you like it or don't like it, it is the way it is going to be. And we have to think about how do we deal with this on an investment-wise. And as I thought about this program, as I thought about how to put this together, and my thoughts about what we're going to do for 2017 for portfolios, are there going to be changes necessary? Are we going to stick with some of the same things we've got going on? As I began to put all that together, and I've been thinking about this for a couple months, naturally, thinking and pulling everything together, I came to a couple realizations. One is Trump was a real estate developer. Trump was the type of person that dealt with a lot of regulations. And some of those regulations, I know some real estate developers, and we've done some real estate development. Regulations are some of the things that truly drive you nuts, right? In many cases, you don't see any reason for the regulation. In many cases, they don't really apply. It's the same in my business, in the financial services business. The regulations are there. A lot of them don't apply, but you have to comply because the rule is there. It's a regulation. That's the world in which Donald Trump built his wealth, is a world where not only were there some regulations, but year after year after year after year after year was another and another and another and another regulation. So that's where he comes in. And as I thought about his picks, I thought that defines some of his picks. And right after this commercial break, I'll come back and tell you what I think the impact of that background is on Trumpenomics.
More about money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
How do you picture retirement? House on the beach, small farm in the country, traveling the world with your spouse. The one thing you don't picture is running out of money. Retirement dreams are shattered all too often by poor investment choices, sending many retirees back to work. If you think the job market is tough now, try entering it after you've retired. Don't run out of money. Start planning now. Call Mike Adams of Adams Financial Concepts today at 206-903-1019 and learn more about how you can create wealth for retirement and probably, most importantly, protect yourself from running out of money. Adams Financial Concepts specializes in creating and maintaining wealth. Call today, 206-903-1019 or log on to adamsfinancialconcepts.com. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I began to talk about Trumpenomics. And I talked about Trump coming up and spending his life as a real estate developer dealing with regulations. And as I put together the list of cabinet people and began to look at what they were doing and how they were doing, I realized there's a common theme that's running through this whole selection process. Take, for example, the Labor Secretary, Andy Pudzer. Pudzer?
Pudzer.
I'll probably mispronounce the name, but that's okay. You know who I am. He's a person that doesn't believe in the minimum wage. He's going to deal with a lot of regulations. He doesn't believe in the overtime rules. He doesn't believe in the visa H-1B. He has a lot of issues with a lot of the regulations in the Labor Department. We don't know exactly what the feeling is for the Department of Labor fiduciary rule, one that, for me, is really important, one that I believe is really valid because of how much it's taken away from the participants in 401k plans, 403b. But he's going to deal with that. And I believe that he's going to deal with removing a lot of the regulations, the overtime regulation. He's going to deal with the federal government as well. If you look at the federal government and employment in the government employs 2.7 million people. But think about that, 2.7 million today. In 1962, there were 2.5 million. So there's only 200,000 more today than there were in 1962. But his opinion is that we're going to slowly reduce that number. They're going to probably do a hiring freeze. They're probably going to reduce pension pays. They're going to eliminate automatic raises. They're probably going to try to squeeze out people with poor performance, which isn't a bad idea. The ideas aren't bad. There's a lot of regulations that have been piled on regulations that have been piled on regulations. And some of that's very positive. I think some of that is going to be very positive. I have some concerns. But if you look as well at the Energy Secretary, Rick Perry, former governor of Texas, he's a person that believes in the fossil fuel, oil and fracking, went to bat for that in any number of times. He's a person who denies climate change, as does Donald Trump, as does Scott Pruitt, who is the head of the EPA. They're people that don't believe in climate change, and the regulations that have come in on the coal industry, on cleaning up the environment, on many of those regulations which have been put into effect during the last 8 years, some of those regulations are going to disappear. Some of those regulations that have been put in over the last 20 years are going to disappear. That's my opinion. And that's the theme I see happening in the energy section. Office of Management and Budget is Mulvaney, who believes in a balanced budget, of all things. And a balanced budget makes sense for a personal person, but balanced budgets historically have never worked for countries. They've been a disaster, in fact, for countries, because when you get into a time of 2008, 2009, a Great Recession, a Great Depression, it's the government, the central bank, that bails out the economy. You can go back and look at the first Great Depression, 1837. It was actually the Bank of England, and to a lesser degree, the Bank of France, that bailed out the United States out of the first Great Depression. In the Great Depression of 1930s, it was the central bank that bailed out. And yes, it took a number of years, just as it did through the Great Recession. The crisis of 1874. The crisis of 1874, the arguments were the same as the arguments that were made in 2008 against TARP, against stimulus. The arguments were the same. Let the businesses be survival of the fittest, and those that can survive, survive, and those that can't, don't. Let them go broke. That was the concept of 1874. There was no central bank to bail us out. And the result of that is we had 30 years. Every other year was a recession. It was a very, very difficult time. Unemployment during that time ran at almost 20% for 30 years. Think about that. That's like what we're seeing in Spain and Italy, lesser extent in Italy, seeing that in Greece. High unemployment, very difficult time. For us, it turned out to be a very good time because a lot of those people who were unemployed and a lot of the immigrants started their own businesses, and the economy of the U.S. converted from an agricultural nation to an industrial nation, but it was with a great deal of difficulty. That's what happens when you don't have a government that becomes, or a federal bank, central bank that becomes the lender of last resort. And yet We have a person that believes in a balanced budget. We'll see how that works. But a lot of regulations are going to go away. And then the Securities and Exchange Commission announced yesterday Jay Clayton, who has been an attorney who has defended the banks, defended Goldman, defended the banks against the SEC, against the regulations that came into effect, a person that has a great deal of difficulty and probably doesn't believe much of Dodd-Frank. And I think that a lot of regulations are probably going to go away. It's my industry. I understand the industry well. I understand the compliance part. And the compliance, given Dodd-Frank, given the anti-money laundering, given 2001, given all those things, the compliance burden has grown. I have some business where I actually do some exporting of parts to a former Soviet military plant in converting to commercial aviation. And so I had to register with the State Department in the same way as if I was selling nuclear weapons. Not that I'm selling nuclear weapons, but the application to do that is 2 pages. 2 pages. You know what it is for me to sell stocks and bonds? 90 pages. That's the contrast. That's because of all these regulations that have come down. And some are superfluous. Some don't apply at all. But the fact is, they're important. And some of those regulations are like the Volcker rule. If that's done away with, that will allow banks to again use their capital to speculate and create products of speculation, which led to, in my opinion, were a major, major, major factor in the crash of 2008 and 2009. It's what brought Lehman Brothers down. It's what brought the financial system into a tremendous crisis. It was the triggering element was the subprime mortgage market. But if the banks had been healthy, they could have withstood that. If they had not been speculating with their own money, they could have withstood that. But they get to leverage their own capital 3 or 4 or 5 or 10 times to 1. And that's what the Volcker rule out of Dodd-Frank prevented. Now, if we begin to eliminate the rules in Dodd-Frank, and I believe that it's going to happen, it's going to be awful. In general, the regulations, a lot of regulations are going to disappear. That means that businesses are going to expand. Businesses are going to take advantage of it. It's going to be a very positive thing, in my opinion, for the short term. But for the long term, I have deep, deep concerns. Not in 2017, maybe not 18. In 19 or 20, we'll have to see where we are. I don't have a specific number this week. I will be developing a specific number over the next couple of weeks. So stay tuned, and we'll get to a specific number. Until then, I'm on Thursdays, Fridays, and Saturdays. Have a good weekend and a good week.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on AdamsFinancialConcepts.com. That's AdamsFinancialConcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams, here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Your business leader for Seattle is 1300 KKOL.